Welcome back. Well, with the latest GDP numbers released, how will this play out on domestic commodities going forward? Let's talk to research analyst at financial derivatives company, Amaka Ajebu. Good afternoon, Amaka. Thank you very much for joining us.
Thank you for having me.
Now, minus 1.3%, that's the GDP for the fourth quarter of 2016, and of course, minus 1.56% for the year. What came to your mind when you saw these numbers this morning?
Well, initially, it was a fresh air to see, a growth rate of minus 1.3%, because that is like an almost 1% improvement from third quarter results. But then further analysis of the results published by the MBS shows that the agricultural sector, which we all banked on to be the main driving force for the non-oil sector, actually contracted in the fourth quarter. So you're seeing a negative trend between the improvement in total GDP and the movement in agriculture. So that's a key point that worries me a little bit.
Now, do you think the new GDP numbers will actually encourage any pivotal changes to policy and implementation?
Yes, it will, because it serves as a form of encouragement. So we can see that this point is likely to be the point of inflection where we see growth rates improving as we progress in 2017. So I'm very sure that policymakers will receive a sense of encouragement from this, and this will help them target policies to key areas such as like the forex market and the power sector, to name a few.
Now we've heard of double deep recessions where a recovery is in sight only for the economy to crash again. What is the probability of this scenario manifesting?
Yeah, so double dip recessions occur when you see maybe a quarter or 2 quarters of positive growth, and then the economy contracts again, so to negative territory. So this isn't the case in Nigeria per se, but we can use the same rhetoric. So we've seen an improvement of 1%. So is this a point of inflection, or is GDP going to sink further? So this would depend on a very number of factors, and the key one is spending. So how effective is how effective are policymakers and the government going to be in encouraging spending? Because everyone right now is trying to put their money into savings, and whatever money they have, they're just trying to put it away. So how are we going to encourage them to come out and spend this money, which we need to jolt the economy further? So that would depend on spending, and also factors such as unemployment as well.
Now, what impact do you think this improvement in growth numbers would actually have on domestic commodity prices?
Yes, so the GDP numbers are historical, and now we're looking forward to the February inflation numbers that are coming up. So there's no direct relationship because of the time difference. But what we can take from this is a signal in the right direction. So if the government can keep up with their the new trend of policy reforms, especially policy reforms in key sectors such as, or key markets such as the forex market and also the banking sector, because if we look at the breakdown of GDP numbers, we will see that manufacturing and trade were also major contributors to the decline in the non-oil sector, and this is because of forex and financial costs. So if we can target reforms in this area, then we'll see output increase, and this will affect commodity prices.
Our recent changes, Amaka, recent changes to policy have been observed this February. What are we likely to see in the first quarter of 2017? How do you think the growth numbers will respond to these new policies?
So our problem has always been, policy delay or silence, total silence in some areas. So now that we're seeing policy reforms in the power sector, we're seeing policy reforms in the forex markets, we should definitely, all things being equal, see an even better improvement in Q1 2017 GDP numbers. So the ability of policymakers to, really dig deep and strategize and implement these policies as fast as possible will help, drive Q1 2017 growth.
Well, Amaka, just before I let you go, how much more needs to be done to ensure a reversal in the negative economic growth trend?
Yes, so like I said, reforms in the power sector, reforms in the forex market, reforms in the banking sector. Right now, power has actually recovered to 4,000 megawatts, from the measly 1,500 we were seeing at the beginning of the year. And power is a major factor that is affecting producers and manufacturers. So reforms in that sector, reforms in the forex market, making these manufacturers able to purchase their raw materials abroad, making them able to borrow at sensible costs would help move outputs in Q1 2017. So we need more of these policies to help ensure that we are on the right path to recovery.
All right, thank you very much, Amaka Ajebu, research analyst at Financial Derivatives Company. Thank you very much for your time. We quickly now move over to FMDQ FX market to see how the naira is behaving today, and I'm being joined with by Linda Chukuma, FX dealer with Wema Bank. Good afternoon. Thank you for joining us, Linda.
Yeah, good afternoon.
Now, give us a sense of where the market is right now. I mean, the month ends today. And of course, yesterday we saw the release of $180 million by the central bank. So what's the naira dollar behavior today?
Okay, well, the FX market is, I'm going to give an overview. It's currently trading at 305.5. So we've seen lots of developments in the FX market since the announcement of the new policy in the previous week. CBN has been intervening heavily to the sale of forward and so for invisible transactions. These aside the daily spot flow of 1.5 million in the market. But as I said, CBN has sold over 600 million, which is quite remarkable, and it has boosted liquidity in the market. Although DNBs await the results of yesterday's forward, as announced by CBN. The parallel market right now is currently at 440, 445. Over a week now, the naira has gained over 80 naira. We've seen a huge appreciation of the local currencies compared to previous weeks, since CBN has started intervening in the market.
Now, just a quick one. How sustainable is this appreciation that we have seen, particularly on the parallel market?
Yeah, well, if CBN continues with the sales, I feel the local currency rate will definitely appreciate. If CBN can sustain this, or if we sell per week, if CBN is selling in the market per week, you see the naira appreciating further. I know CBN has promised the system that yes, they will continue to intervene in the market. They are bent on closing the gap between the parallel market rate and the interbank rate.
All right. Thank you very much, Linda Chukuma. Thank you for your time. Linda Chukuma, FX dealer with Wema Bank. Well, it's on that note that we draw the curtain on today's edition of the program. Thank you very much for being part of it. I'm Chinuzi Obiwago.